Welcome back to this pre-budget special. We are in conversation with Samir Arora, founder at Helios Capital. Samir, great to have you with us. We were talking about what to expect from the budget, but the budget will come and go. The market, of course, continues.
Has to move on.
Has to move on. It will move on. In what direction, though, is the question. We discussed earlier how we were standing out, but in the on the other side.
But not that it's negative. It's just that we have not, because we've not had the FII flows, which have surprised me, because if US is doing okay so far and China is doing okay, that means the world is broadly okay, because these are the two big overhangs from 22. I would have thought that if they are doing well, then India will also be up and will get some flows. But what seems to have happened is that people, FIIs, are taking out money from India to put into China, because China, Korea, Taiwan all have had massive positive inflows this year. I can't believe that that is a longer term trend. That even if you believe that, okay, China has recovered and you want to play the rebound trade, that you have to take out money from India to put there.
Correct.
So I think this is just the first round from people who act fast, react fast, maybe hedge fund types who have fixed amount of money. So they are moving from one to the other. But we don't believe that some new sovereign, a new allocation from endowment would mean that go overweight on China. That you have to take out from India. Therefore, if those two markets are broadly steady to up, we can't be down. We may underperform for some time.
What is your view on the US? I know you track that
So for US,
well.
my logic is that in the next 2-3 months, unless it's already happened, because this month Nasdaq is up more than 7% and S&P is up, I think, 4% unless it's already happened, that the US market will not be negative this year. First of all, very few occasions in the last 100 years that the US market is down 2 years in a row. In my life, I've seen it only once, which is 2000 and 2001. Secondly, if you see their issue, which is to do with interest rates and inflation, that will play itself out in maximum 3-4 months. One will be on our budget day, Feb 1st, but after our budget, and then maybe 2 more. They have already signaled to you broadly that 5 to 5.25 mein they will pause. They will pause till the end of the year. So in that time, what is the new negative news? I mean, unless it's some completely independent black swan kind of thing. But broadly, this news would have played itself out.
The question, though, is how much will it hurt to control inflation? How much will the economy hurt?
So that you'll start knowing from now only, because now the earnings will also come. But what I'm saying is, on the margin, once you stop raising rates, तो उसके कितने महीने बाद you'll worry कि now it's still negative.
Correct.
And by end of the year, you have to start believing that there will be some cut. Right now, the US market believes it will happen earlier in August, September. Let us say, I don't think it will happen so fast, just because the Fed, the chairman keeps saying, I am going to show you guys kind of thing. So let's say end of the year or even first quarter of 24. So uske liye to December tak it will be okay. So I don't think the US market is falling or falling a lot or even falling, I think. And therefore, every day we won't have to look and to say, oh, US market is falling or we should wait for it to settle down. And China is already doing well. I think it's doing too well for no reason, but let us say it is doing well. So if both these are not a negative triggers every day, then life moves on and people will say, let's put money in emerging market in Asia, ex-Japan, because China is part of that, or we are part of that same bucket. We should not be having outflows. If we had a few billion of inflows, I think our market will be okay. Because domestics have the money and they will again come.
Actually, that's an interesting point. You know, we say India or China. The point is that we get most of our money through emerging markets.
Yeah, exactly.
And if the EM basket gets money, China gets money, we will also get money.
Correct.
So actually, it's good news. It's positive. That,
it is generally supposed to be positive. That's why this month I'm surprised that US is positive and China is positive and we are actually not negative, but why it looks every day that we are having a very weak day and flows are in the opposite direction, at least from an FII.
But when you say that US should be okay, then why are you not buying IT stocks, Samir?
So I am not buying IT stocks because the Nasdaq stocks, which are up, like many of the Nasdaq stocks are up 20-25%. I own some of them in our fund. But those stocks are actually last year were down 60-70%. These were not stocks down 20%. But if you look at the big names there, Microsoft and all, just 2 days ago, Satya Nadella said that he's seeing slowdown in his customer base. That's why they are firing whatever 12,000. Google said. Salesforce said, the cloud guy said, this business software guy said. Only we don't say. So I have to wait for them to say.
And that will start now because earnings, etc., will start to.
Plus, no, I'm saying the Indian companies don't. We mean the Indian companies don't say. So let them say or let them.
But is it possible
my
that.
My feeling is that even if these guys do well as a stock, they are not going to pain the hell out of me. So then I can live with it for a few more months. It's not that I will feel so bad that I should have had this instead of this. I am in fact hoping that the budget will boost some consumer type behavior which might help my consumer chotu stocks, which are all these low ticket consumer, if there is some attempt to help the middle class. And secondly, pre-election year, so a lot of spending will happen across India by all parties, on rallies, on public, on trucks, on everything. Few billion will be spent. So that also is okay for my... So it's not that IT
so
has to do
saying that IT will
should not pain me.
Which means it should not go... It should not hugely
outperform my 8-10%. If it outperform 1 or 2%, who cares?
It is fine. Yeah. Banking and financial services, right? I mean, numbers have come through. I say all numbers have been pretty good.
Response has been not good.
Response has not been good.
Because that again, same thing. Now you need new. See, right now, the existing crowd can say we have it, although they don't have HDFC Bank. In fact, HDFC Bank has therefore done the best. I read a report from one broker that HDFC Bank could have 5 billion of buying by foreigners if this thing happens that the MSCI weight, which currently only HDFC is there and not HDFC Bank, but when they combine that, the weight goes to like 11-12% instead of I think 6%. That is worth $5 billion in one stock.
Once the merger is
just approved, which I think has to happen. But mostly everything has been approved, so plus minus 3-4 months, maybe June, July or sometime like that. So
financials will do well when foreign money...
So I'm saying a little bit, because you need new money and then they are supposed to buy 35-40% financials, right?
Correct.
Right now, maybe they had it last year and now there's no new flow. So the whole game is a little bit of new flow which will solve many of these issues. But at the end of the day, if you know that guy is growing at 20% and the stock is not going up, but it was not overvalued to start with, then you know you will get it. Sometimes it happens that, okay, it's growing 20%, but the P was all-time high, it was 70 times, so it was discounted. In fact, it was supposed to grow 30% for it to do well, which is happening with these consumer guys. So right now, we will have to wait to see all these things.
Last week, earnings from a lot of consumer companies saw earnings downgrades.
Yeah.
Right? What's your view there? I mean,
so I think
their valuations are also very stretched.
But I
That's
think
the problem.
one thing is that this is coming out that the rich are enjoying and the middle class is not that it is hurting to like pain, but they don't have new money, or maybe the pent-up part is over and you're going out first time after COVID is over, and now that base is also going to be increasing. That is why I'm saying, even we have many of those consumer stocks which haven't done well this month and maybe even in December. So that's why we also need the budget to boost consumerism.
No, but are you worried that maybe there is a bit of a slowdown and it may fester all through this year?
Well, the thing is that because we buy only these low ticket things.
So that is where a lot of the
no, I know, but in general, we believe also that middle class is there, and you know, if you can't afford the big thing, maybe you'll go and buy more of my burgers, or go and see more movies, or go out more,
or footwear,
correct, or many things. Or you could go into a cheaper hotel like my Lemon Tree or something. Who knows? So the point is that generally the consumer grows over time.
Right.
It could grow because of this spending on elections or whatever. So in the end, you don't have to walk away from these things. These things are, basic. If these are not going to grow, how will India grow?
Correct.
Because it's relying on India's demographics, on middle class increasing in size, on middle class having more income. So I don't think these are too basic to... Here the only game is not this. The game is you should not overpay. And if you're overpaid, 6-9 months might go, but you should not overpay for 3 years of growth.
Generally for consumer space, you think PE multiples, which everybody's gotten used to, 30-40 times is, you think...
But not 70.
But not 70, but even you think there will be a bit of drop-off which will happen if...
See, if these guys, because we are trying to buy companies which are growing 20% type for a 30-40 multiple for next year, not this year.
Okay.
If you have 50-60 multiple for 10-12% growth, then I don't like it. If you are going even 20-22%, okay, in Indian context, we have been used to it. But the problem is to try and change the game. To say we should not look at P, we should look at cash flow. That is just a misrepresentation, because even prior to all this analysis, why did Tata Steel have 6P and some other consumer company had 30P? Because it was known that fellow is cyclical, that fellow needs capex, that fellow will have this, not just Tata Steel, any of these. So you already, because of that, gave 5P to one group and 30 to another. Now you can't say, no, this guy's got cash flow. Hello, if he didn't have cash flow, put him into the 5 category. That's what I mean. You can't say, because he has cash flow, I'll go to 70. That group already had 30-40 multiple for these reasons. And another thing is that if a company is too efficient in converting to cash, it is doomed. Because one part of the growth of life is improvement. If you're already perfect in everything, then now you're only reliant on top line growth. Because now everything else, how much can you squeeze out of savings, faster working capital, recovery, efficient? That has a limit. In the end, it has to be from growth of the top line. And cash flow is from whatever earnings you made converted to cash flow. But you can't overdo that.
Any other spaces apart from what we've discussed which you like now?
We have bought defense.
Okay.
And we have bought even...
That's a new addition, defense?
No. We had Bharat Electronics for like about a year must be, last Jan.
Okay.
But only one.
Okay.
But right now we have bought these two beaten up, everybody's talking about, so I might as well tell you, these two beaten up Paytm and Zomato, which has become so much in the news. Although we buy only 2.5% or each, but we have bought them and we are now favorably inclined.
Is it like a punt, or you really betting that this is a...
We don't punt.
No, I don't mean punt in the... All our punts in the sense, we always buy 2.5 of newer things. Right.
So we don't buy 5, I know everything. But it is fair to expect some good return. Let's see.
Samir, it's a great pleasure to host you in the studios here. Thank you so much for your time. Really appreciate it.
Thank you.
Well, that's a wrap on this episode of What the Markets Want. Thank you for watching. Thank you for staying with us.